Let's bring in our next guest. It's Oliver Sloup from Blue Line Futures in Chicago. Thanks for joining the show here. Good morning, Oliver. Anything you want to get out and talk about when it comes to these grain prices?
Well, kind of a mixed bag here to start the week, a shortened week. Markets are closed on Friday in observance of Good Friday. Obviously, we've got corn flat, beans down, and wheat up, so a little something for everyone out there. What we're looking at is this corn market. Obviously, May corn has been mostly range-bound for the better part of the last month and a half. December new crop corn has been where a lot of the momentum and the strength has been, as a lot of that near-term uncertainty gets shifted down the timeline. So you're seeing that continue to grind higher. But if you look even further down the timeline, we're looking at DEES 23. December 23 corn is working on its 18th straight day of gains. That equates to about 80 to 85 cents. So a lot of momentum in these deferred contracts as the uncertainty continues to get pushed a little bit further down the timeline.
And, we've been talking about that all morning, and that's, it's understandable because, look, we've got a full-blown fuel crisis. Now we have a food crisis. And there were reports this weekend, Oliver, I read, that said that if the U.S. has a bumper crop, that still might not solve the problem.
Yeah, there is just a boatload of uncertainty, unprecedented. It seems like the word unprecedented has been overused over the last 2 years, but we keep running into these snags on the supply chain that just continue to put premium in a lot of these commodity markets. Eventually it will come to an end, but right now that momentum and that flight to safety is in hard physical assets. You're starting to see the weakness in some of the stock indices, and I think people are looking for a place to park their money, and that's in those commodities where you drop it and it lands on your foot and it hurts a little bit.
Right, and that's called inflation, and we're going to get those reads this week as well. We've got a CPI number, a consumer price index, which is what is largely followed as the inflation number. Last was at 7.9%. They're expecting about 8.5% this time around. And then we've got a producer price index number later this week, which was last at 10, and they expect that to be about 10.5 too. So we've got a lot going on, Oliver, so it's going to be one of those buckle up again deals. But I appreciate you giving us that insight and that content.